In a landmark decision, the U.S. Supreme Court has struck down the Trump-era tariffs, ending years of protectionist trade policy. The 6-3 ruling declared the tariffs, imposed under Section 232 of the Trade Expansion Act, an unconstitutional overreach of executive power. Global markets reacted instantly as the tariffs had become a structural feature of the world economy. The court's decision reasserts congressional authority over international trade, fundamentally shifting the balance of power. For free trade advocates, it's a return to open markets. For protected industries, it's a moment of uncertainty. The majority opinion emphasized that regulating commerce with foreign nations is Congress's job, not the president's. This ruling unwinds a key pillar of the America First agenda and signals a powerful judicial check on presidential authority. The world must now adapt to a new era of global commerce, with consequences that will unfold for years to come. Financial markets erupted in volatility, with traders scrambling to react to the sudden and dramatic shift in the global economic landscape. As the Supreme Court's decision hit the wires, newsrooms buzzed with urgent updates, and investors worldwide braced for impact. Asian indices, like the Nikkei and Hang Seng, soared to multi-month highs, as markets anticipated a windfall for exporters now free from U.S. tariffs. Companies in electronics, automotive, and heavy industry sectors saw their shares jump, reflecting hopes for increased sales abroad. European markets rallied in tandem, especially among German automakers and manufacturers, who stood to benefit from easier access to the U.S. market. Meanwhile, the U.S. dollar weakened noticeably on fears of a rising trade deficit and concerns about America's competitive edge. Commodity prices for steel and aluminum plunged, reflecting expectations of a global supply glut as international producers prepared to flood the U.S. market with cheaper goods. In the U.S., stocks of protected industries like U.S. steel and domestic aluminum producers collapsed, erasing months of gains in a single trading session. In contrast, tech, retail, and construction shares surged, as investors bet on lower input costs and new growth opportunities. The S&P 500 and Nasdaq quickly rebounded from initial jitters, signaling renewed optimism for most sectors, especially those reliant on global supply chains and international sales. Investor sentiment was split, relief and excitement for most, but deep anxiety for workers in newly exposed industries. Boardrooms buzzed with opportunity, while factory floors braced for uncertainty. The CBOE Volatility Index spiked sharply, reflecting the initial shock, then gradually settled as markets began to price in a more open, competitive landscape, and the potential for long-term growth. The removal of tariffs is seen as a massive stimulus for global trade, opening new doors for exporters and importers alike, and setting the stage for a new era of international commerce. But for some American communities, the adjustment will be painful and swift, as factories face new competition and workers worry about their future in a rapidly changing economy. Chief Justice Roberts' majority opinion focused on the separation of powers, not the merits of tariffs themselves. The court ruled that Congress alone has the authority to impose taxes and tariffs, and that national security was too vague a justification for sweeping executive action. The decision drew on the Federalist Papers and early debates about limiting executive power. Justice Kavanaugh's concurrence stressed accountability. Congress must answer to voters for trade policy, not the president acting alone. The ruling narrows Section 232's scope to true emergencies, not broad economic measures. It restores democratic oversight to trade decisions with massive economic impact. The court's message: economic power must remain with the people's representatives. The recent ruling immediately nullifies tariffs on steel, aluminum, and a vast array of Chinese goods, marking a significant turning point in global trade relations. These tariffs, which once added billions in extra costs, are now a thing of the past, opening the door for smoother and more affordable international commerce. U.S. companies can now import essential materials and finished products without the burden of extra fees, which means lower prices for everything from the steel beams that support our skyscrapers to the aluminum cans that hold our favorite sodas. This change is expected to ripple through the entire supply chain, making manufacturing more competitive and affordable. The logic behind the decision also undermines the controversial Section 301 tariffs on Chinese imports, effectively making them unenforceable and removing a major obstacle for businesses that rely on global sourcing. Supply chains, which had been forced to reroute and adapt to avoid costly tariffs, are now rapidly realigning for maximum efficiency and cost savings. Companies can once again optimize their logistics networks, reducing delays and unnecessary expenses. Major tech giants like Apple, along with countless other manufacturers, stand to save billions of dollars. These savings can be passed on to consumers, allowing retailers to offer lower prices on electronics and other goods, making technology more accessible to everyone. The agricultural sector is also poised to benefit in a big way, as China is expected to lift its retaliatory tariffs on U.S. farm products. This move will restore a vital export market for American farmers, especially those growing soybeans, corn, and other key crops. American farmers, particularly soybean producers who have faced years of uncertainty, can now regain access to critical export markets. This renewed demand is likely to boost farm incomes and stabilize rural economies across the country. The end of the trade war unclogs global commerce, allowing goods to flow more freely and efficiently. It also relieves economic pressure on rural America, where many communities depend on agricultural exports for their livelihoods. With these barriers gone, businesses are now free to make sourcing and investment decisions based on logic, efficiency, and quality, rather than being forced to navigate a maze of political restrictions. The dismantling of trade barriers is emerging as a major driver of global economic efficiency, fueling growth, innovation, and new opportunities for businesses and workers alike. The positive ripple effects will be felt everywhere, from factory floors where products are made, to grocery store shelves where consumers will find more choices and better prices on imported goods. The Supreme Court's decision is a double-edged sword for the U.S. economy, introducing both opportunities and new challenges, but the net effect is expected to be positive. By overturning the tariffs, the court has set in motion a series of changes that will ripple through industries, markets, and households across the country. The removal of tariffs acts as a powerful stimulus, lowering costs for manufacturers and consumers alike. American factories can now source materials more cheaply, and shoppers will likely see lower prices on everyday goods from electronics to clothing. This could boost consumer spending and help businesses expand, creating new jobs and opportunities. America's trading partners, Canada, Mexico, and the EU, welcome the move, seeing it as a boost for cooperation and the rules-based order. These countries have long advocated for open markets, and the decision signals a renewed commitment to fair and predictable trade. Global supply chains, once fractured by tariffs, are now poised for a more efficient recoupling. Companies can plan with greater certainty, and the flow of goods between continents is expected to become smoother and faster, reducing delays and costs. Companies will pursue China Plus One strategies, but with more flexibility and less distortion. Businesses can diversify their supply chains without the artificial pressure of tariffs, making them more resilient to future shocks. The US-China relationship will shift. While trade friction eases, Washington loses a key lever in its strategic rivalry. The removal of tariffs may reduce tensions, but it also means the US must rethink how it competes with China on the global stage. The US must now find new ways to address issues like intellectual property theft, unfair subsidies, and technology transfer. Policymakers will need to develop innovative strategies to protect American interests without relying on broad tariffs. The economic relationship may smooth out, but geopolitical competition remains. Rivalries over technology, security, and influence will continue to shape the global landscape, even as trade barriers fall. The end of tariffs removes a major irritant, but the search for new tools begins. Both sides will look for alternative ways to advance their interests and protect their industries. The world is entering a new phase of global economic integration, with countries and companies adapting to a landscape that is more interconnected, yet still competitive. The adjustment will be uneven, with some sectors and regions benefiting more quickly than others, but the long-term outlook is brighter. As barriers fall, innovation and growth are likely to accelerate, offering hope for a more prosperous future. The biggest winners are industries reliant on imports. Autos, construction, retail, and tech. Ford, GM, and other car makers will see costs drop, potentially lowering prices or boosting innovation. Construction firms benefit from cheaper steel, spurring new projects and jobs. Retailers like Walmart and Target can offer lower prices as import costs fall. Tech companies, freed from tariffs on Asian components, will see higher profits and possibly cheaper devices. Domestic steel and aluminum producers, however, face renewed global competition and likely job losses. The industrial Midwest will feel the pain most, while coastal and agricultural states stand to gain. The effects are uneven, but the overall trend is toward greater efficiency and lower prices. The lifting of retaliatory tariffs also reopens vital export markets for American farmers. In Washington, reactions split along party lines. The administration cautiously welcomed the ruling, seeing a chance to reset trade policy with allies. Congressional free traders hailed the decision, while industrial state lawmakers and unions decried it as a blow to American workers. Wall Street cheered, but sector-specific funds tied to steel and aluminum tumbled. Beijing's response was measured but optimistic, signaling willingness to lift retaliatory tariffs and resume robust exports. Chinese media framed the ruling as a defeat for U.S. protectionism. In Brussels, leaders praised the decision as a win for transatlantic relations and the rules-based order. European manufacturers and investors celebrated the reopening of the U.S. market. The Supreme Court's decision forces a shift from unilateral tariffs to multilateral engagement. The U.S. must now work through the WTO and build coalitions to address unfair trade practices. This could revitalize the WTO and lead to new agreements on digital trade, environmental standards, and industrial subsidies. A US-EU-Japan partnership may emerge as a counterweight to China's state-led model. The end of blanket tariffs incentivizes deeper trade integration with trusted allies. Domestically, the debate between protectionism and free trade will intensify. Future trade policy will rely on targeted, constitutionally sound measures, like anti-dumping cases and supply chain security. The era of blunt tariffs is over, but the quest for balanced trade policy continues. The U.S. faces a new era of global competition and cooperation. The Supreme Court's decision marks a turning point for U.S. trade and constitutional law. By restoring legislative oversight, it reaffirms the rule of law in economic policy. The ruling signals a break from protectionism and a return to open, rules-based global commerce. Lower costs, more efficient supply chains, and renewed growth are expected, though some industries will struggle. Geopolitically, the U.S. is nudged back toward alliances and multilateralism. The legacy? A smarter, more resilient globalization, shaped by lessons of the past decade. The world now faces a new era, one of opportunity, challenge, and renewed pursuit of prosperity.